Welcome back to Power Lunch. I'm Mike Santoli, and this is Trading Nation. Energy stocks getting a lift today, but still among the market's biggest losers for this month. Just take a look at names like these: Valero, Hess, Anadarko, all sinking between 15 and 18% in October alone. So ahead of Chevron and Exxon earnings on Friday, are there any signs of a bottom in energy? Craig Johnson is with Piper Jaffray. Boris Schlossberg is with BK Asset Management. Boris, anything to like in this group here?
Yeah, I mean, I think basically they've gotten better because they've had lackluster earnings, they've had some litigation risk, they've had capital expenses, but a lot of that numbers are already kind of priced into the market at this point. And their very defensiveness, I think, is very attractive now in a volatile tape because for example, Chevron and Exxon are both yielding more than 3% at this point. And with higher crude, they should actually print better numbers going forward. In addition to which, Exxon really has a very interesting catalyst. They have a huge find in Guyana that could be as much as 75% of their current flow rate. So looking forward, if you basically assume that energy is not a secular short, that we're still going to be using oil going forward, both of these companies should really bounce quite nicely going forward, I think.
Craig, Boris mentioned the defensive nature of big oil. Of course, some energy stocks are more aggressive, but is that something that you think is suited for this tape right now?
Mike, absolutely. I 100% agree with Boris on that. And I think what a lot of managers are looking for is they're looking for the escalators down, not the elevators down in this market. It's been a rough October, off over 9% for the S&P 500. And when you look at the energy names, it's a sector that hadn't performed very well, but we're starting to see the relative performance of energy pick up. And you look at stocks like ExxonMobil. In fact, Mike, all the stocks with greater than a 20 billion market cap are up 3 to 4% so far for the year, so well outperforming a lot of stocks out there. ExxonMobil looks like a name that's just been consolidating when you look at that chart over the last couple of years. And from our perspective, those kind of charts usually resolve themselves to the upside, not the downside.
All right. Well, if our only choices are the escalator down or the elevator down, I guess you do want to choose the escalator, guys. We got to leave it there. Thanks very much for your help today. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation.
A double bottom is a chart pattern that suggests the downtrend may be ending and ready to reverse. Sometimes called a W formation because it looks like a W. A double bottom occurs when prices form two distinct lows on a chart at around the same level. Traders often view a break of the highest high in the formation as a bullish signal.